Inflation, inflation, inflation. As the cost of living goes up, your pay stay the same. The same goods and services that used to be worth Y are now worth X. Inflation affects everyone, even companies. So how does a business beat inflation? I'm Kalila Reynolds, and it's time for another episode of Money Moves JA, brought to you in partnership with EXIM Bank's Business Advisory Service, giving you the tools to grow your business. Joining me now to discuss how does a company beat inflation, we have CEO of Jamaican Teas and President of the JMEA, John Mahfood. Hi John, it's great to have you.
Thank you.
So today we're talking about inflation, that word that's been on everybody's lips for the past few months. But today we want to look at the business angle. So how do businesses survive inflation? You're there at Jamaican Teas, a manufacturing company. How do you beat inflation?
Well, fortunately, in the last, what will we say, 4, 5, 6 years, the government has been managing the economy quite well, and things have been very stable. So we have kind of gotten used to a reasonably stable economy with relatively low interest rates and relatively low inflation rate. So this recent inflation that we are experiencing is new to a lot of business people again. And in this case, it's really not caused, it's a very unusual type of inflation in that the economy is not yet not yet where it used to be back before COVID. It's still relatively slow. So the inflation at a time when the economy is slow is unusual. And of course, we know why that is. It's caused by the resurgence of the economy in the US. And that has driven inflation worldwide, including the shipping costs. Mm-hmm. So the bigger issue for us is, well, let me put it this way. When you look now at companies on the stock market, especially manufacturing companies, you see the effect of inflation. You see it in Seprad's accounts. You see it in Lasco's accounts, where the prices of the raw materials and goods that they sell have gone up so fast that their price increases have not kept pace with the price, with the increase in cost, and it has squeezed their margin so that their sales have increased, but their profits have decreased or stayed the same. And that's the challenge for companies in rapid increases in inflation. In a poor economy in particular, is how do you increase prices fast enough to keep pace with the increase in the supply. And so it really requires a lot of management.
And that's what I was just about to come to as well, in terms of how do you deal with the price issue when your profit margin is being squeezed. Do you keep prices the same, or do you raise prices at the risk of losing some customers?
That is always a challenge, and I think a lot of us, and including myself, we did not increase prices fast enough, our selling prices, and we paid the price in terms of reduced margins and profits declining in this last quarter. And when the inflation is high, as it has been, it means that you're challenged now to find the working capital to buy the goods which are going to come and replace those, and you have to find even more money. So it's a challenge, but I think that you really have to bite the bullet. You have to take the chance and increase your prices and maintain your margin. Otherwise, you're going to fall behind. And I think the other thing is that a lot of people say today that it's a temporary inflation, and that it is going to reverse itself early next year. Mm-hmm. And I think that's why companies have not been as quick to increase their prices.
Because they're hoping it passes over.
Right, they're hoping that by early March or thereabouts, we'll start to see a decline in raw material prices and shipping costs, and maybe they should ride it out. But it does appear that this is going to be with us for a long time.
Right, and that's unfortunate. But the other side of the coin is dealing with the dollar, stability of the dollar. You are also president of the Jamaica Manufacturers Exporters Association, which I remember last year there was a big thing about, I think it was Metro was president then? And
not Metro, but he has been very vocal. Richard Pando, he was the president, but Metro is very, him and Mr. Azan are very vocal in talking about the devaluation.
Well, as I speak to you now, the dollar is at 156.
Right.
So how do you deal with that as a business owner?
Well, first of all, the devaluation that Jamaica has been experiencing since independence is one of the greatest illnesses and sicknesses that a country can have. When I came back from abroad, living abroad in '85, the dollar was 3 to 1, and today we know it's approaching 151 to 1. And what devaluation does is makes
156.
Right. It makes the people poorer. It makes the country poorer. And it stifles the economy, and it means too that it also creates inflation. So in the old days before we went on this IMF program and so on, a lot of the governments and foreign advisors would justify devaluation by saying, if you devalue, it'll make your exports more competitive.
Right.
But the fact is that in Jamaica, all our raw materials that go into manufacturing are imported, and the types of products we produce don't benefit from devaluation. People don't buy our products because they are cheaper. In other words, they're not high-tech. They're not telephones and cell phones and other high-tech equipment that is going to be sold on price. So the fact is that devaluation has eroded the worth of the wealth of the country. And the other thing it does, which is also really bad for business people, it makes business people lazy. And I say that because when you are running a company and the dollar is devaluing and the inflation is running high, and you think that your sales have gone up, and I just myself, I was looking at my company when we went public in 2010 to today, and I looked at the sales in 2010 and the profits, and I looked at it today and related it to the foreign exchange rate. I said, but you haven't done so well, So when you, as a company, say, okay, 2021, I'm going to set my budget for sales, and you say, okay, I'm going to increase it by 10%, and you actually increase it, and you think you did well, but the reality is you haven't done anything. All you have done is stayed this, and so
kept up pace with devaluation.
Right, and as I say, it makes you lazy, because when you look at the numbers, you say, oh, I did well, and my profits went up, so I'm a good manager.
It went up in Jamaican dollar terms, but not in US dollar terms.
So if we actually produced accounts in US dollars, like Dolphin Cove and a few other companies, you would see that if you do, most of them, it would be you would be seeing any increases in profits or sales. So what I try to do, so that I don't fool myself, is when we have the results come out, I keep on looking back at how we have done in US dollars. And the other thing that, in our case, why we have a little benefit is that from the beginning of time when we started, we focused on exports, and so
you earn US dollars.
So we earn US dollars. We now sell 65% of our sales are in US dollars. But when you are selling in US dollars, you don't have to adjust your selling price. For 20 years, we haven't had to increase or change our selling prices, because they automatically are are adjusted for devaluation. So while the raw material increases, so does your selling price in Jamaican dollars. So ideally, that's one of the reasons why it's so important to export. But if you can't export and you're depending on the Jamaican economy and the Jamaican market, you have to always set yourself very high goals in terms of profit increase and sales increase that exceeds the rate of inflation and your expectation for the rate for the devaluation of the Jamaican dollar.
That's a really valuable insight, John. I thank you for that. So, because what the conversation has often focused on is on business people basically hoarding US dollars and they hedge against devaluation that way. Is that a strategy that's advised?
No, especially now with the interest rate so low. Up until now, where the dollar has been relatively stable, if you put your money in US dollars and you get 1 or 2% interest, or maybe 2.5 or 3, and you're satisfied with that, first of all, it's not productive money. It's sitting in a bank somewhere benefiting a foreign country, not Jamaica. And what you have to do is really try to look at ways that not only hedge against inflation, but give you a decent return. And putting your money in the bank and earning 2% is not a good way of doing it.
So like you mentioned, exports, increasing exports is a great hedge against inflation.
Right.
Can you think of any others?
Well, as I said, if you run your business on the basis of always looking at how you have done in relation to the value of the dollar, if you evaluate your performance year to year against the dollar, the rate of the dollar last year, and translate it into US, and look at it this year and translate it into US, it will wake you up so that you have a higher expectation for yourself and your business, and you're not satisfied with just a 10 or 15% increase. So most companies in Jamaica are really focused on the market here. They don't have the advantage of exporting. But one of the other hidden problems with devaluation is that when the dollar is moving at a rate, say for instance, right now it's 156, and at the beginning of October it was 150. So within a month it has dropped, it has devalued, what is that? 5% or something. That is pretty fast. And if you're importing raw materials and you see the dollar moving at that rate, you're going to say, okay, I need to cost my goods on the basis of what I think the dollar will be next month. So maybe you now cost it at 165 to 1, and that in itself creates inflation, because you're now pushing your prices up beyond the actual rate of exchange. So that's something I've spoken to the Minister of Finance and the BOJ is, if you don't have a stable dollar, if it fluctuates up and down and people don't have confidence in it, they're going to do things to protect themselves that will hurt the economy of Jamaica.
But what's the view of your membership on that position in terms of pricing goods based on where they expect the dollar to be?
Well,
is that something that most people...
It's a rational thing that people do, because sometimes it's even hard to get the dollar. And so you have to pay up extra. You know, in 1 month, you might find that you can go and buy the dollar at the going rate, and then other times it's very tight. And I don't think the Bank of Jamaica is doing enough to manage the availability of foreign exchange and maintain, while we're not expecting to have a fixed rate of exchange, you want to have small fluctuations that are predictable, so that you don't have people trying to, number one, as you said before, put away a lot of US dollars for a rainy day, which hurts the availability.
Right.
And you don't want them pricing up their goods in anticipation of that the rate is going to be higher. So, and this other thing the government did, the Bank of Jamaica did, pushing up the interest rates, thinking that somehow that's going to help inflation. I think again was another mistake. When the economy is weak, to push up your interest rates, and when the inflation is not caused by internal factors, we have another problem.
Those are really great insights, John. Thank you for joining me today.
Thank you.
Here's a recap of some of John's key points. When businesses keep their prices the same during an inflation period, they run the risk of lower profit margins and even losses. Convert your company's earnings to US dollars to see if you're truly beating inflation and devaluation. Focus on exports to earn in US dollars. If you price in USD, you won't have to adjust your selling price because devaluation is already accounted for. That's it for this episode of Money Moves JA, brought to you in partnership with EXIM Bank's Business Advisory Service, giving you the tools to grow your business. Visit their website at eximbankja.com and visit my website, KalilaReynolds.com, for a summary of this episode. You can click the link in the description box below. I'm Kalila Reynolds. Until next time.